Good morning, everybody. Hope everyone is doing well as we get into the action today on this Thursday. Today, again, the stock market closes early at 1 p.m. Eastern Time in observance of the July 4th holiday, which is tomorrow. So stock market today closing at 1 and is closed tomorrow. We'll reconvene on Monday. Now, we did get some big data out this morning. The non-farm payrolls report did come out. It came out actually pretty good. So take a look at the data below on the bottom of the screen. 147,000 jobs added. Now, what's so interesting about this is that earlier this week, I said, guys, they're releasing this before the July 4th holiday weekend. I said, when they do that historically, and again, the Friday is the close day, right? So you basically see that if the number is good, they'll release it early. They'll release it before the holiday because they want to get everyone in a good mood and showcase good stuff, good economic data, so that people go out and spend, right? Spending July 4th holiday sales everywhere. All right. Now, the kicker is this. If it gets pushed off a week and they say, oh, well, we don't want to release it because Friday is closed and we usually release it on Friday, so we're going to do it the next Friday. In general, that means the number is bad. Remember that, guys. These are insights that you're not going to hear anywhere else. But sure enough, that's what we saw. And what's interesting is yesterday we got the ADP private sector numbers, which were negative. And when I saw that, I even was thinking to myself, like, okay, that's a bad number, but they're going to release this tomorrow? Sure enough, it was a good number. So again, just amazing how this works. Remember this for future periods when you have a holiday at the start of the new month and we're expecting jobs data. If they release it early, then it's good. If they release it late, it's probably bad. All right. Overall, the unemployment rate dropped to 4.1% from 4.3%. And interestingly enough, the data showed that last month's number was revised up slightly. So we're used to these 50,000 revisions down. Now, last month got revised only up slightly, but we didn't see the big revision down. So what do we take from this, guys? Overall, it means the labor market is still pretty solid, assuming we believe these numbers. But overall, that's all the market cares about, right? So we did see the stock market overall getting a little bit of a bid here. You can see this is the S&P futures, right? So this is when the number was released. We were basically trading flat to slightly positive. We got a pop initially, then a pullback, now a small move up. Now you might say, man, this is great news. Why are we not seeing a bigger reaction to the upside? So number one, the markets have already rallied up precipitously. Number two, and this is the important one, guys, this is such a strong number that there is now no chance that the Federal Reserve is going to cut rates at the end of July in their meeting. In addition, the market was pricing in 3 cuts into the year end. It is now changed to only expect 2 cuts. So yes, it's good economic news, but also you have to look at, well, the market really wants cheap money, as does President Trump, obviously. But here we're getting data that is going to keep the Fed more on the sidelines than bringing interest rates down. And if we go to the 10-year yield, let's flip back to the charts and take a look at the 10-year yield. Look at this, guys. Look at the pop on the 10-year yield. And arguably, this was yesterday. Remember yesterday when and this is some conspiracy type stuff, right? I mean, this is really wild because yesterday we got the ADP number, right? So we got the ADP number, and I was saying, I was like, well, that's a really weak number, yet rates are going up, but a weak number means the Fed is more likely to cut, yet rates were going up. And then lo and behold, what do we get? We get a really strong number on the non-farm payrolls, and then it's like, okay, who knew yesterday? I call BS on that. Someone knew yesterday, some big institutions knew yesterday, and they saw the rates, rates were being pushed up. And then here's your pop. And then look at this, guys. Look at this. We saw how this, again, support, breakdown, confirmed. So it's a real breakdown. What do we get? Retrace to the scene of the crime. Where's the high on the 10-year yield? Right back to that line. And I teach you guys in the game plans this all the time, and it is just absolutely awesome. And just a side note, guys, do not forget here, folks, just a couple days left on the sale, the education sale here, the July 4th, our investor empowerment day. Empower yourself, guys. Again, 50+% off on all of our courses, but just through basically July 4th, maybe a little into the weekend, but that's it, folks. That is absolutely it. So there it is, guys. If you want the code right there at the bottom, scan that. But again, you can go to our website, verifiedinvesting.com, underneath educational courses, trading courses. You'll see all of those, and they're all at least 50% off. You can't beat that, folks. I mean, literally, we have people that take these courses and then end up making hundreds of thousands, if not millions of dollars from it. It's pretty cool stuff. All right. Let's get back to the charts and get into the nitty gritty here. Looking at the S&P here, we have a couple trend lines I'm following. So here's your retrace that we've been watching. We kind of kissed the scene of the crime here, pulled back a little bit on Tuesday, Wednesday up, and today it looks like maybe, we'll see, maybe we retest this line. But this is a huge line of resistance because, again, markets were pounding on it over and over and over again until it finally broke. Very minimal break, by the way. I mean, sometimes you get breaks and it really crashes down, a la something like this over here, right? I mean, this was a great trend line right here. That got a huge break, right? So that one, that's not what we saw here. The markets have been too jubilant. We've seen too much of the animal spirits. But as we go up, you're coming into this, and now we have to even talk about this trend line, which would be a secondary scene of the crime. It's up a little bit higher, but both of these lines are coming to merge right up here. So that, again, just for me, that's something that I am paying very close attention to. And then next, just a reminder, we're talking about two levels on a shorter term basis that are coming up to that point. But don't forget, we also have the logarithmic trend line going back to the pre-Great Depression high all the way to the .com high, and we are coming right up to that line again. And notice how this is all coordinating, right? So we have here, we hit it, we got this quick pullback, and now we're coming up. And literally, folks, the two lines I just showed you, the scene of the crime 1 and scene of the crime 2 from the previous one, that is all going to merge up at this level here. So that, to me, once you get three trend lines merging like that, that usually is something significant to pay attention to. So again, I'll keep you guys on point with that, and we'll continue to watch it. All right, so again, 10-year yield, hit scene of the crime, pulling back a little bit, but still up pretty sharply. We're back above, basically above 4.3% at 4.336. The dollar also catching a bid here. The stronger economy in the U.S. is making some players buy into the dollar dominance again, but obviously we're still below a major trend line of support there. Now, early this week, I said, guys, the play is going to be to buy the Russell here. You're seeing a money rotation now that the second quarter came to a close. So far, that has been dead on. The Russell up another 1% yesterday and is up over 1% this morning already. And this, again, is what we would call the catch-up trade. So, again, you look at stocks like Meta. Meta, we know, right into double top, getting rejected. And also, this is, remember, end of quarter, beginning of quarter, beginning of quarter. So this was, again, essentially window dressing up, double top on a technical basis, and then money rotating as big funds are saying, wow, this has been such an epic move. We got to take some money out of Meta. Let's reallocate it to the IWM stocks, the Russell. And again, I still think the Russell has more room to run here, likely heading up, possibly even as high as here. I mean, here, and listen, I mean, it could even go to all-time highs. I mean, the rest of the markets are at all-time highs. Why not the Russell? Okay, a couple stocks to pay attention to. Datadog getting added to the S&P 500. Again, there was a company that got bought out, so therefore it's no longer in the S&P 500. So there was one extra spot. There was a lot of speculation it was going to go to Robinhood again, and then it didn't. And Robinhood this morning, take a look. It is down pretty sharply here, but you can see the kind of euphoric run on Robinhood on hopes again that it would be added to the S&P 500, and it was. Those dreams got dashed again. So again, look at the parallel, by the way. Great parallel. Low here, connect all these lows right through here. And you guys can see, again, right through there. And so all the lows going back to March, basically April 2025. And we extend that out. And then we come right to these lows here and the high from yesterday, which also happened to be the 100 even number Pierce, which in technical analysis, even numbers play a role in tops and bottoms often. All right, Datadog, just going back to this one, it's having a great move today, trading around 149. Is there a shortable level? So there's a gap fill here at 148, but we're already above that. So for me, the 152 might be a level, but high risk. And then again, 152 to 153. If it gets through there, you're looking at 158. But 152 to 153 is interesting. If we go back here, though, you can see this one pop here, we did get to about 152 and change before the pullback. So, in essence, it's kind of already seen a little of that price action. All right, on to Bitcoin. Bitcoin yesterday was trying to power above this trend line. By the end of the day, it closed on the trend line. So I'm not considering that a close above. I consider that a close on. Today, it's back above. So that's a positive, but it needs to close above and then confirm. Without confirmation, I always remain slightly skeptical, just slightly. I mean, again, remember, I deal in a world of probability. So, a confirmed breakout is probably 80% that it's going to go up to the next level. With a close above, it's probably 65% that it's going to go up to the next level. But it still leaves room where there's a decent chance that it's a fake out. If you don't close above, well, then it's basically at best 50-50, and you even shade the downside. So again, it's a world of probabilities that we live in, and that's, again, how I trade, where everything has a small chance that it can fail. The best setup in the world, there's still a small chance it can fail, and I love that because it keeps me from doing something stupid like going all in on a play, right? Again, there's no 100% in markets, and so if people go into an investment thinking it's 100%, it just inherently it means, well, we should put all our money in then, right? Because you can't lose, right? But we know in trading and investing that's not the case. I've experienced that many times over, and I just try to convey that to you guys because, again, if you guys can learn from a lot of my errors, that's awesome. That's my goal of these, obviously, these game plans. All right, gold. Gold is coming down today. Why is gold coming down a little bit? Number one, it had 3 days up. Number two, the jobs report was strong. So again, there's probably a rotation towards risk assets considering the U.S. economy remains decently strong here, at least in the near term. And number three, the dollar's up, right? So the strong economic news is pushing the U.S. dollar up. When the dollar goes up, there's a tendency for gold to move down. However, it is still holding this technical level here, so we got to respect that. Notice here it closed below. It never confirmed, and they kind of pulled the rug and pushed it back up on anyone that was trying to jump the gun on shorting gold right there. So it's still, again, got to wait for the levels to confirm to really have that high probability that it's a real breakout or breakdown. Resistance will remain around 34.40 right up here. Support remains right here, and you guys see the other levels. Now, silver's been my kind of pseudo darling here in terms of price action. It's trying to break out today of this consolidation phase. Again, I haven't gotten in because it hasn't come down to the low end down here. But listen, like I said to you guys many times over, if I miss a trade, I miss a trade. I miss so many trades on an everyday basis. It's more about which ones do you get. As long as you get a couple, you make a lot of money in this game. But again, nice move up. It was up more, but it has come in a little bit. We'll watch to see. But if you close above this, the odds start to favor the upside. If you confirm, they heavily favor the upside. Where would this likely go? My trend line here, this is your upside target. Major trend line connecting the lows from 2022, 2023, 2024, tough couple times in 2024. That is your trend line. It's really around $39 on silver. So that would be your next upside if you can break out here, which would actually be about just under 10%. I mean, we're at 36 and a half, so maybe not quite 10%, but still, it's still a decent move up on silver. Oil, guys, popped yesterday. We talked about that. Again, I said, watch this line. If we can break above it, we should get momentum. I said my target was between $67 and $68 a barrel. Yesterday, it did go right there. It went around to about $67.50. And yours truly, I did take the profits with my commodity, smart money commodity members. So remember, this wasn't a trade where I was looking for a big gain. We had shorted it at those highs. We made a great gain on the down move. And then I was like, okay, well, it should have a really quick snapback. It finally did. I was starting to say, okay, there's a bear flag building here. It was an immature bear flag, which again, probability wise, it means it's not a really great one. But sure enough, we finally got the move out of oil, and I took profits on that. So again, I am now back to neutral on oil, just waiting to see what the next formation is. But I love this. This is the greatest thing about swing trading is, you see the trend line, the parallel down sloping here, shorted up in this range when everyone else is saying, oh, but Israel and Iran, this could go to the moon. Even analysts were like, oh, it could go to $100 per barrel or greater. Anytime I hear that, I'm like, okay, they're even getting emotional, right? And emotion is the worst thing in this game to be, essentially. It makes you think things that are crazy. Always ground yourself with the charts. The charts are how I ground myself. It is reality. The charts don't lie. They show you what they show you. There's no narratives in the charts. It is what it is, all right? Lastly, natural gas real quick. Let's go over that just to see if there's any new change there. Not really. Still support and small bounce. No tradable factors here for me. Again, my first potential level would be down around 309 to 308 on nat gas. All right, so aside from that, guys, it's been one of those days. Remember, half-day trading, jobs data was strong. Means that it's unlikely to be a down day today. I mean, listen, anything can happen. Let's be fair. Maybe some tweets come out or some social media about these trade deals that we're expecting next week. I did hear that there's one with Vietnam that's kind of out, and the market already knows about that. But it doesn't seem like the markets are really reacting to these. It seems like they basically punched in that we're going to get these trade deals, so it's mostly factored in. And even today, you could see the markets are not ripping higher on this strong data because half the market wants lower interest rates and half the market wants a strong economy. Really, if the market had its way, it would get both, right? I mean, it would want low interest rates and a great economy. The problem is the combination, what does it do? Causes inflation. So you can't have both. You can't have your cake and eat it too, essentially, which is what, Trump has really been pushing for. But that's kind of scary because if we drop interest rates to 1% like he's stressing, then it's like, okay, well, when do we see that 5-10% inflation coming back, which would inevitably come with a strong economy? If you have a weak economy and you lower rates, weak economies tend to be slightly deflationary because people have less money because they lose their jobs. But again, strong economy, low rates, recipe for inflation. All right. You guys have a great 4th of July if you celebrate, if you're in the U.S. If you're not, I wish you all the best. Thank you guys for supporting as always. Don't forget, guys, we have that course sale that will be just for the next day or so. Then it's over, not to come back again for a very long time. You guys, again, have a great rest of your day. Have a great holiday weekend. I'll talk to you soon. Take care.